Welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. This is where we marry technical analysis and option analysis. We'll take a look at the picture of what's going on, and I'm going to give you some estimates on what the options are pricing in for potential moves into the stocks. And the stocks we want to look at have a binary event, earnings. And the first one that I want to kick off with, and you're seeing that the S&Ps right now are up pretty substantially, up 0.7%. That's basically almost a 2% move in the first 2 days, up 1680. But I wanted to start looking at some stocks that are going to have some earnings this afternoon after hours. And you could take note here. I'm going to take a look at what's been going on with the stocks. I'm going to give you an estimated move, and then you can put me to task. See if the stocks move in this range that I'm about to discuss. The first one I want to start with is AT&T. Trading down 6 cents, basically flat, down 0.17% at 39.05. Clearly see that the stock has been in a bear trend. So if you're bearish on telecom, you're bearish on telephone, all right, you have a lot of company. It's through its 20, its 50, and its 200-day moving average on a daily chart. So really the scenario is how can telephone and the telecommunications sector actually start to pick up maybe earnings, right? Right now, if you take a look at telephone, there is a lot of anticipation of violent moves in ticker symbol T, which is AT&T. What do I mean by that? I take a look at what's called implied volatility rank. You've heard me talk about this ad nauseum in Tech Talk. That is a rank level that will tell me if you get closer to 50, 60, 70, 80, 90, or 100. Getting to 100 means that there's a high anticipation of violent moves either up or down. Then I look at the option pricing. That'll give me an idea based on the time frame of those options, in other words, when they expire, of what the potential move in a stock could be. Folks, I'm giving you transparency. So not only are you looking at the past and what's currently going on, but I'm going to give you a range of what potentially could happen going into earnings. All right, so taking a look at telephone, implied volatility rank is at 45. Of all the names that I'm going to discuss today, this has the highest implied volatility rank. This is telling you that there's a heightened sense of potential violent moves. Now, it's not over 50, but it's still pretty high, especially in this environment where volatility has been historically extremely low. What does this mean? Well, I took a look at the options. They're pricing in the potential for telephone to be either up or down about 1.8% going into the expiration of this week's options. Some weekly options. So going into this event, they're pricing in about a 71-cent move, either up or down in this $39 stock. You could see it at 41 or 40.71, or you could see it as low as 39 and some change. Now taking a look at our favorite little Mexican burrito place, if you're going big box, I got one right down the street from where I live here in Chicago. That's phenomenal. But Chipotle Mexican Grill, CMG. Now, this stock is volatile. Regardless of where its volatility rank, when it has earnings, volatility seems to just ratchet up around it. Right now, CMG is trading up $2.01. That's good for about 0.4% at 40.70.80. Now, you clearly see that CMG, basically since mid-March, has been on an uptrend, just a complete tear to the upside. For the last two sessions, it's pulled back. It's still above its 20 and its 50-day moving averages. That's telling me that the short-term, intermediate term, and being above the 200-day moving average, the long-term traders are all in this. They have been firm in their conviction over the last month and a half, 2 months, and you clearly see that with the market action. But a test of 456, a test of 437 on the price levels, that could put the bulls on their heels. Context here. The implied volatility rank is coming in at 37. That's telling you that there's a heightened sense, but not a huge sense. It's on that lower third, but still on that upper part of that lower third. So there's a growing sense of potential violent moves, but not a huge sense. It's below that 50 level. I want to see it above 50 if I start to think that there's going to be some volatility, especially going into earnings. And this is for the next 3 days. The options are pricing in basically a 5.4% range in this $470 stock. That means $25. So you could see it as high as $496, or you could see it as low as $444 or $454. Excuse me, or $444. 445, 446. So who's counting, right? But that's the range going into this binary event that the options are pricing in. One thing that's notable, some big cap names that we saw, especially take for instance McDonald's. McDonald's is up $7 today on earnings. You saw Caterpillar up $7 on earnings, and those are well outside their estimated moves. So you're starting to see that maybe some sideline money is getting a little bit afraid of missing this next leg to the upside. So you could see, even though that the volatility ranks aren't 50, 60, 100, that these moves could be moving a lot more just because that sideline money starts to get a little bit leery of missing that next leg. I want to put an air of caution out there on chasing those types of markets. That's a very dangerous way to invest and especially to trade. With that being said, now you got going into tonight's event a range of about 5.4% either up or down being priced in for the next 3 days for this particular stock, CMG Chipotle Mexican Grill. Next one I want to take a look at is Capital One Financial. Now, COF is the ticker symbol. It's been trading in a downtrend and then a consolidation up until the last 3 sessions. We've seen that financials have bounced back since we've seen that bonds started to get weak. In other words, bond prices going off, yields going up. That's positive for these types of financials. This has been one of the laggards in the financial community. Capital One Financial, as you can see, it's been in a downward trend. It's challenging its 20 and its 50-day moving averages. So the short-term bulls have gathered some control since this pullback back starting in the beginning of March, and this consolidation now is since mid-April. We'll see if they can get the further conviction with the numbers that are going to be coming out. Watch very closely, though. This is a 37 IV rank, so it's increasing. Still on that lower third, but on that upper part of that lower third as far as the rank scale of 0 to 100. Their options for the next 3 days are pricing in a range of around 4%, either up or down in this $85 stock. That's basically about $3.50 range, either up or down. You could see it as high as 89 or you could see it as low as 82. We're going to see what happens after the announcement of the earnings. But as you could see, the short-term and the intermediate-term bulls are trying to gather some traction, especially the short-term bulls. If they can get back over that 85.99, 86 level, you could see that the bulls might start to try to retrace that $90 level, which is where we would see the next level of support, or last level of support, which is now resistance. Finally, we want to take at Wynn Casino. Now, Wynn Casino, you have to be very careful about. It sometimes gets air pockets and illiquidity. But since I saw some interesting activity as I watched some of the Hong Kong gaming names, Sands Galaxy, Macau, a lot of casinos in Macau, they were actually performing quite well. I'm going to start seeing if we get the similar performance metrics here in the casinos that are based in the United States. Now, Wynn does have exposure to Macau, but trading up right now, $2.37 in front of their earnings. That's at 117, so it's good for a 2% pop right now in front of earnings. You've seen that Wynn has had a very nice uptrend consolidation, stayed above its 20-day moving average and after challenging it, and is well above its 50-day moving average. Those are the levels of support that you're going to want to watch going into earnings. Now, what's the IV rank? 32. Still on that lower third, but on that upper third of that echelons, right? Once you get into 50, 60, as I had noted, that's where you think that these could have really big violent moves. But remember, we have earnings, so this changes the whole landscape. So what are the options that are trading for the next 3 days going into this event? Pricing in about a 2.4% or about a 2% range, or in other words, a $5, basically $6 range, either up or down in this $117 stock. We could see it as high as 123 post earnings, or we could see it as low as 111 post earnings after hours. Let's keep an eye on all of these stocks, and now you have much more transparency. So if you're positioned in these stocks, you now have a range going into the event that you can anticipate watching. If it goes outside that, either good or bad, based on whether you're long or short, you're going to have that emotion at least tempered because you could have done something before or in advance, whether it's hedging, whether it's maybe ratcheting down your size, taking profits, or just trimming it so that it fits your portfolio and your risk tolerance. All right, folks, that's it for Tech Talk. Join me at 4:30 Eastern, 3:30 Central Time. I'm going to wrap up all of today's action here in the U.S. markets. Join me here at MarketStream.live.